The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here on the second day of November. The monthly candles and all the different sectors are beginning to work for November. Really important. Let's just, first of all, thank you to our host. Great programming so far this morning. I hope I can keep that up. We want to go all the way through to this afternoon, and at 6 o'clock this evening, Eastern Time, for 1.5 hours, I'll be presenting my webinar. And that's this webinar right here on the front page of TFNN. You'll see it right there. An opening call subscribe event live with Basil Chapman after the election. Are the markets still a buy? Hosted by Basil Chapman, Wednesday, November 2nd, 6 o'clock till 7:30. And, excuse me, that wasn't part of the program, but it is now. Let's go straight to the numbers. The Dow is down 36 at 18,000. One of the reasons why we went short the Dow this past week is all the patterns that we were looking for. Let me do this one at a time. There's no real rush. You've got the Dow 120-minute chart. I have this technique that I've developed over the years. For about 1.5 years, I've been working on it, practicing it in real time and all that. And it's a Chapman Wave 5. It has only the concept of Elliott Wave, so I really have to call it a Chapman Wave 5. And what we were looking at in the 120-minute chart was, besides that H pattern that goes to the lowercase m, I put this at the top here back in late September. And I said, this is a pattern we're very familiar with for those of you who know my work. And two things go on. One is you can go to the H pattern and then successfully break out above it for a cup formation, or you continue the lowercase h that goes to another arch like an M formation, lowercase m, which could become a continuous pattern. After you take out the left side low in that third arch, this is the one right here, you have to be careful because there could be a very strong rebound. Because if there isn't a rebound, you're going to continue making lower lows and lower highs. This all has to do with tonight's webinar and going into the election, going to a week from today, Wednesday the 9th. That's going to be really important. So let's look what we're talking about. The Elliott Wave 5 has worked on the way up and down, up and down. Sometimes I have to move the number a little bit because I'm only waiting for patterns to unfold. And in this particular case, we went from 18,399 at peak E in the Chapman Wave at 11:30 on the 10th of October, straight down to the 17,959, and then within the arch formation there was a peak A, B, C, D. That's what we look for. Gave a down arrow at number 4 in the Chapman Wave count at 17,275, and then we rolled over, and yesterday we smashed down below 17,959 to 17,940. Now what we've got is 5 is complete. At least this is the way it looks at this particular point. We take out 17,940 today or tomorrow. That's a different story. I'm thinking that there's just enough strength now to have another arch formation. All right, within the daily chart, let me show, oops, where did that go? The daily chart right there. We're still making those lower lows and lower highs. And there's that election date coming up on Tuesday. We've got a few days to go before then. Not the point. The point is, if you look at the my overview that I give, for this event, don't forget, you will get 1 month free of my daily newsletter. That is an incredible amount of work that goes into it, and trades and all sorts of things like that. I follow them up every single day. But I also give you an overview and market today outlook. That's this one right here. I wonder if I can just go to that right now. Oh, well, that's coming up. Let me just go on and say, look at this volatility index. It went to 20.43. Now, there are seldom times when the volatility index goes this high and you do not get intraday some triple-digit declines, and you just keep going down. This is unusual. This was absolutely, as far as I can tell, even now with the VIX index at 19.35, I'll be talking much more about it tonight, up 78 cents. This is insurance buying. When this insurance buying is of no use, you will see the market push to the upside. At this particular point, there's a bifurcation. There are money managers and fund managers and hedge funds and private people that are putting money to work saying, I need some insurance going into this particular election. There are others that are saying, I'm selling this market, but I'm also buying this market. I'm kind of holding it up. And that means that you've got a market that says buying insurance, looking out a week or less than a week. I see positions that I'd like to buy. And that's what I'm going to be talking about tonight as well. What are the implications here? And let's get on to our nitty-gritties. So we're going to go on. The E-mini is down 3. It also made that leg D to the downside. Could be a trough D if there's no new low below 2091 today. But it is leg B in the weekly chart, and we're going to see on Friday how this closes, because so far the technicals are still very poor. The 120-minute chart is really what I'm looking at and saying, I think that the VIX is going to probably pull back a little bit, and we're going to see some kind of a rally. Intraday, and we've seen some kind of a rally and then a pullback. Made a peak F in the 10-minute chart, pull back. Now it's testing the 9-period moving average. That makes the low that we just saw of 2096.25. We're at 2100, so there's about a 4-point difference there. The closing under that is really quite negative, but pushing ahead is good. We could even retest the high that was made just a little while ago, 2106.50. All right, now let's get to the nitty-gritties. So I'm going to go through this again very quickly. Oh, where did I put my clock? My clock is tick, tick, tick. Tick is right. Hope I got time. Okay, here we go. The Dow, INDU. Look what we have. We have another arch formation just above the 9-period exponential moving average. This is a leg C to the downside. Could be a trough C if there's no new low today. And that says you don't have to get to D's on the downside, but my thinking is that we will go to a D. Meantime, I'm seeing the chance of a very nice bounce here. The Dow's down 3. It was down much more before. And it's the weekly chart that we will look at, and we'll have a closer look at it maybe a little later on. Let's just go on. So we've got the S&P .SPX.X. S&P made a trough. Now this could be an F/B or a C. I'm just going to do it quickly. I'm going to say a C. And what we're looking at, the B minus, this is the weekly chart is not nearly as good as the Dow. This is actually looking very poor. And the monthly chart in both cases is still acting quite well. So parameters to watch, I would say 2097 on the downside and 2114 on the upside. Okay, so let's go to the QQQ series in a sell mode. This is very unusual. We've got a sell mode in the daily, and I really have to consider this could be a peak F right here coming up this week in the weekly chart, and that would suggest lower lows and lower highs. But the monthly chart is still very good in the weekly chart. This is a very key moment. Let's go to, I'll quickly go to gold. I don't want to run out of time. Gold was up very sharply. It's up 16 right now. This is leg E. We are in gold. We are short the Dow. We are in a gold position. It's doing very nicely right now. Gold, I like gold. I'm going to talk about gold tonight in a different context to what I normally do. I'm also going to talk about the dollar, of course. The dollar right now is down sharp. It's down 41 and 97.28. And crude oil, I was asked about crude oil. Is the USO going to hold? And I'm going to tell you right now, be careful. There is a glut out there. We've been talking about it for a long time. USO peak F in the daily. I'll talk about that tonight as well. I'll be right back. Dow's down 2, S&P's down 4. Basil Chapman, Time Conditions Hour, waiting for tonight at 6 p.m. for my web.
Gee, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, folks, let me just get these in order that I got them. So GME, so USO, yes, be real careful. 10.20 might have to be a retest of the 9.811 USO. Hey, just there's no bravura here. You can get smacked very hard if you're wrong, especially in crude oil. GME is GameStop. I haven't looked at it in ages. What was the question? GameStop, Kate Spade, XRT, too late to short. Oh, man, XRT. I'm going to be talking about the RTH and the XRT tonight. Those are the retail ETFs. And is it too... No, it's not too late to short because I think they're going to be going down to quite a bit. But is it too late in terms of risk reward? Yeah, at 41.88 on the XRT, I would say. And Kate, oh man, this Cole Porter song, "Kiss Me, Kate." We've got down 1.11 at 15.24. I would just have to say Kate looks like it's going even lower, but I couldn't recommend shorting it. Not. It would be a complicated way of doing it. And if you want, you could start at 15.20. Yeah, maybe you could start just a nibble, but that's really not the issue. For the best risk reward, you want to bounce toward the 17.28s in Kate, which is Spade and Company. The other one was that you were looking at. So GameStop. You know, there's just too much online. I've been looking at this for ages. I've been to a couple of games. Well, I haven't gone in. I've walked past the GameStop. Once I went in when I was with my grandson. Talked into getting him something there. But I have to tell you, online you can get so much. People, that's really the issue. Bricks and mortar versus online. I mean, it's just real simple. So, okay, be careful. That's what I'm saying. Now, this is what I'm going to be looking at here. Yeah, so GameStop, too late. Kate's too late. But they are going lower. XRT, yeah, it's trying to balance this on the 200-period exponential moving average. This is going to be, I'm going to be talking about XRT, RTH, and Amazon. And I'm going to be talking about them tonight in my webinar because we want to be positioning ourselves in my opening call for different things. I said to go short Amazon right there, almost like the day before the top. And I said, you know what? We're not going to short. I don't want to waste 700 and something, or it was 800 and something dollars going short. We've got other areas that are real short, but this is definitely giving me a sell signal. A Chapman Wave 5 in the daily, Chapman Wave 5 in the weekly, and a possible F. I don't think it's really an F. I think it's an alternate count. Whether it's an alternate count, it has to be an A or a B. Yeah, I'm just leaving it at that. Amazon needs to digest its gains. And this is saying to me that this Christmas season, the holiday season, might be very disappointing all around. I mean, you know, I've been talking about that as well tonight. So, okay, GT, no, I would just say to you, be careful shorting right now. You could buy puts. You could buy puts further out. Yes, that's different. But if you're talking about shorting, that's something else. Next question was crude oil. So let me just do crude oil one more time. Crude oil looks like it wants to test the weekly at 45.20. It wants to test the 44s. If it cracks 44s, that monthly chart is just saying this is one of the worst, you can't even call it a rally, worst rallies it's had since back in 2015 when it tried to go from 61 to about 77, and then it just collapsed within 2 months. So this is not a good sign. And this is really talking about the glut that I've been just referring to forever. So if you're looking at something, you're looking at the USO or the SCO. What is SCO is a ProShares, ultra short Bloomberg. Yeah, this is A, B, this is leg C. So how you play this now, it's almost like, once again, you really, just for money management, you need to wait for a pullback. But I would say for USO, for the SCO, this is the ProShares ultra short Bloomberg crude oil contract, crude oil fund, I guess. I'd be looking at this and I'd say, you know what? I think there's a target of 95.45. It's 5.5% away. If there's a pullback at 90.27 and you want to start a small position at about 80, 87.90, somewhere around there, somewhere in the low 98 to 90, high 97s, I would put in a 1-point stop. That's number one. And the second that it breaks, the tick that breaks 91.35, if there is a pullback first, that is, there is a pullback and some kind of a peak C is made, then I would buy 1 penny above. If this is the high of 91.35, I buy 1 penny higher. And that one would have the tightest stop. Why? Because my target would be up in the 94s to the 95 area. And that would suggest that crude oil will, in fact, test the recent lows, not recent, recent enough, I guess, September lows back in the 43.50, 43.49 area. Okay, I hope that helps you. Next thing we want to look at is, let me just see if I've got any questions in the den. Before we do that, I do want to look at the next thing. Hey, Michael. Michael, thank you very much. Skyscraper would cast a long, maybe illegal shadow. Yeah, I've already gone through that. I'm just trying to think. Did I put that into my... I don't think I put it in my newsletter, but it's in my talk for tonight because it's all part of the whole thing that I discussed for ages now. What happens in real estate market tops, what the developers give to the cities, because the cities want compromise in order to allow them to come in. They want them to come in and build, but they use the opportunity to get parks, they get streets, and all sorts of irrelevancies to the developer, but they're very important in terms of getting the contract. So that's what I'm going to be talking about. Thank you. I've already covered that. Seeing put buying, SPY, December put buy. Yeah, I think that I'm talking about that tonight. This is the what to do next and how to do it. No, I don't have any problem with that. I think we're looking at something that is there's weakness. And if you look at the charts and you forget about the elections, that's the way you've got to do it. Sometimes it's almost as if the Fed has got an announcement and you say to yourself, wait a minute, I'm looking at the charts. I don't care what the Fed announces. It's rare that the Fed actually inaugurates a completely new directional move. They just accelerate the move that's happening, or just ho-hum, nothing really happens. So that's exactly what I'm going to try to do tonight. Get positioned regardless of who wins, because there might not be, in the first week or two, there might not be a difference in the result. That's what I'm going to be discussing. Tonight's webinar, one of the most important I've given, I think, for two reasons. One is because we're on the cusp of a new administration. It could be a follow-up of the same administration, new president, but with the same infrastructure, or it could be something completely different. Does the market like change? The market loves change as long as it's prepared for it, as long as it digests all the inconveniences first and then goes on to the direction it wants. But it does not like uncertainty about uncertainty. And that's really what we're dealing with right now. All right. So now let's go to something that I think is probably opportune to look at, the TLT. If the TLT, which is the Lehman iShares 20-year Treasury Bond Fund, starts to rally sharply, that would coincide with I think with the market sell-off. That's number one. Number two, when we're looking at interest rates, let me just get to this right now. As the break comes, I'm going to be talking about the interest rates. Have we concluded the Japanization of our bond yields? I don't think it's going to be that easy. But most importantly, let me just show you the pattern we were looking at before. See, there's the bounce. There's this 9-period moving average resistance at 2100 in the 10-minute E-mini chart. Let's see what happens. Still not breaking out or breaking down. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour. Dow's down 12, S&P is down 5. I had a nice email here saying, hi there, my nephews like GameStop because they can trade in their old games and apply the credit to their new games. Can't do that online. Thanks for all you do, Chris. Yeah, Chris, there's something going on that really was favorable to GameStop at one point, but now I think it's kind of tough, unless, of course, you've got maybe a million nephews. That's different. Then they're really going to appreciate your business. But I don't know. It's a tough business. There's no question about it. The beginning of the concept was great. Okay, now let's do a couple of things here. What am I going to talk about tonight? What about I'm going to do quite a bit with real estate. For instance, look, see this here? GE headquarters complex takes a big step forward. Look at this building. What a fascinating building. This is right here at the Fort Point Channel, down in the Boston Harbor front. And what's really important about this is so fascinating. I tell you why. You see the building, and you see that it's elevated. Well, just recently, the water came all the way up. Can you imagine? They're building this new structure. They bought the land, cost them, I don't even know what it cost them. Of course, they get tax credits and all that. Not the point. They're still going to have to pay at some point. They're building this building, and the water came over the ocean, right over the embankment, and went in there. So they had to build, make it a real high-rise building, right? That's number one. Number two is, you see that kind of cover? Looks like a little fence, a little thing that you put for your garden as you walk between the front entrance to the sidewalk. No, this is not a trellis. This is, in fact, solar. It's a solar panel that covers the entire building. I'm not sure what that front decoration is, but it's decoration. It's quite an attractive design so far. It's a little bit like the aquarium. The aquarium is one of those buildings that looks kind of cute and all that when you go in. It's just all real cramped and tight. I don't think it actually works, but yeah, that's my opinion. But from the front, it looks great from the ocean, but from the other side, it doesn't look great. We'll see about this building, but it is changing the Boston landscape. That wasn't the point. The point was GE headquarters complex takes a big step forward. So they are, whenever a company sort of loses its focus because it is really concentrating on something big, and this is a really big deal. All the letterheads, whatever it is, you got to move personnel, you got to fire personnel, you got to find her. It's a big deal for, even though this is a massive company, and this is probably an eye blink in finances towards the whole scheme of things. Everybody from the top down is involved because the eye is off the ball. So I think that's impacting General Electric, and I'm going to talk about this relationship of focus to Donald Trump tonight. It's one of the many things I'll be doing. All right. So now I want to. So the reason why I brought that up was because I was looking to see if I had included this in. No, I included it in my charts for tonight, Michael. I didn't include it in my newsletter today. I was going to, and then I thought, no, I'll keep it just for tonight. But what I did include is that the Newton, Massachusetts, Newton, the city, the Garden City that I live in, we've had a mayor for a number of years, for 2 terms now, and there's an article in the Globe, not even the Newton tab, but the local newspaper, but the Boston Globe, that says Newton retail strip might get a major makeover. So what are they planning? At TJ Maxx and Marshall's, which is extremely successful. I mean, you can hardly ever find parking day or night. I don't know how they do it, but they do it. They one across the street from the other on this really busy road that years ago they stopped the stop. I think it was Stop and Shop. They wanted to come in and say, no, traffic is just too bad. Well, since then they've included a massive rental apartment complex. They've included tons of shops. They've got at least 3 new shopping centers going up. And now what are they going to do? They've got these guys who are going to, I don't have the article right in front of me here, but there is a company who owns the property, TJ Maxx and all. They're going to convert them into almost 1,000 new rental units, that whole area. When do they do it? Always at the top. When does the city allow them and give them all the permission to go from retail, what's going to be retail at the bottom, and apartments at the top? That's the newest thing. You go downstairs and shop, you go upstairs and you wear it. Go downstairs and shop, you go upstairs and eat it. So this is going to be very interesting to see. And this is on the very road that is for decades, under just intense scrutiny because the traffic is just so bad. They're going to do this. And then TripAdvisor moved from Newton just like 100 yards away to Needham, just across the line. into a huge facility. That's going to be interesting to see what happens there. All right, now I need to look at something as we're talking. I don't know if I did that. Yeah. So that 9-period exponential moving average in that H pattern has become resistance for the E-mini 10-minute, and now we've been repelled from the 2101 area, and we're at 2097. So to me, the tide has changed. That's why we're adding in shorts, and we've got a lot of shorts going on. And one of the reasons is, and we're trying to get more shorts, is I believe that in the tide that we look at, remember I was talking about the tide. If I go back to the QQQ series, right here, regardless of the election, if this is a peak F, you've got another week, and then another week, and all of a sudden you're looking at 2 weeks go really quickly, and if there isn't a break to the upside in 2 weeks, and if this level right here, 114.51, let's call it 114, is you close below the QQQ PowerShare Trust Series closes below 114, that weekly chart has got a peak F, and that's time, and I suspect price as well, because once you take out 113.63, the low of the week of the 16th of September, there's pretty much nothing for quite a while to the downside. So this could be time. It could be time and price, but at best, I think it's going to be time. And I don't think we're going to break 119.66 for the next couple of weeks. Aha! So that clears that up, at least in my mind. All right. Now, I've done that, and I needed to go to the commodity index, TRCCI. Made a peak D in an inside buy mode. That's usually not a very good sign. And the weekly chart is struggling at that downtrend resistance line. What is this? This is the Reuters. It's actually the Thomson Reuters Equal Weight Commodity Index. And what I'm looking at here is that it's held well. We finally got stopped out of our DBC, which we've had for quite a while. Oh my, got stopped there. Oh, look at that. I don't know what it was. Oh, there must be something going on. Dividend. I don't know if they give that. I can't remember anymore. The DBC Commodity Index Tracking Fund, it has gas, crude oil, gold, zinc, soy, corn, and sugar. So we've had it since way back at $14.60. Was that, yeah, the last one. And it went to $15.45, and we just got taken out 14.90 for a small gain. We've had it such a long time. I'm a little worried about it because the weekly chart says within this pattern here, be careful of the arch formation because it could come back and retest the low of $14. And that says to me commodities are on a watch. And I'll be talking just a little bit about commodities tonight. Because I do think they're very important, obviously, but I rather would take that time to talk about the relationship of the dollar and gold and what I'm looking at. Okay, there we are. We just had a little bit of a pullback. I'll be right back. There's that big.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So I was asked when I look at the IYT. The IYT is the iShares Dow Jones Transportation Average. Yeah, stuck in this range. Remember, I drew this in the Chapman Wave Inside Track Repellent Zone, and that's exactly what it's done. It's been repelled in that zone. It's made a peak D as a peak C1, C2 in the daily, and it's pulled back from the 147-ish area down to the 141s, trading out at 144.55. Not a bad day, up 63 cents, probably because crude oil is pulling back. But look at this. Peak D in the weekly and still not breaking down. So transportation index is definitely being helped by the lower crude oil. If you look at the XAL, that's really an issue. It made a peak E top in the daily, possible peak D in the weekly. I've got an alternate count there. I'm calling it D for now, but a breakout so far in the monthly chart going to a leg B. So this is saying with crude oil kind of hanging at the lower area, why hasn't the transportation index and why hasn't, in particular, the airline index really powered back to the all-time high of 108.16? It's at 95. That's a lot of points to go, 13 points. So something's going on. And the reason I talk, and I'll talk about this tonight as well, there's a stock called Cintas, CTAS. I missed short. We did short, and then something happened. I can't remember now, and I just never got back into the short side, even though I called the major top in this thing back in the 119 area, 120, 119.94 was the high, all-time high. Now it's trading at 103. Could have shorted any time because it's just walking the. It's not walking the 9-period moving average. It's being repelled by the 9-period moving average, and this is telling me that there's some kind of a cyclical recession going on in certain areas, certain industries. Hey, if you look at, I'll be talking about this tonight. If you look at UTX, look at this. They're stuck at the lower end. It hasn't broken down, but the weekly chart has really taken quite a hit from the 110 area down to 101. It actually went down to the 97s. Look at Triple M. That's even worse. It's getting close to a bounce, but it's in leg C to the downside. It broke that potential cup formation. It's under most of the previous lows, but the one that counts is 163.17, and it's at 100. What was the low yesterday? 163.85. So it's almost testing that. This is not a great chart. Talking about the monthly is still okay, but the daily and the weekly are pretty weak. And I have to look at it and say, well, wait a minute, GE is one of my bellwethers. It's down 27 at 28.61. All that noise that we heard with a big spike from the 28s up to the 29, what was that, 29.65 area. Now it's at 28.60. This is not good action. So I'm going to be talking about the Dow Quartet. What are the implications? Where would we, or do we, and if we do, where would we want to buy this as a sector, the Dow Quartet, GE, IBM, Triple M? Well, that's going to be a big issue. USD, what is the question? USD, the dollar peso Trump indicator wave count. Yeah, I'm not going to give anything right now. I'll do it tonight about my Trump indicator, where I see him in my wave count in the head. That is, it's all in my head. I haven't written it down, but I'll talk about it tonight in my webinar. So, folks, this is going to be really important. We're looking at EUR/USD. So, is the euro now on its way up? Is that it for the euro? It's making this H pattern that goes to an M pattern. Now it's in the middle of making another M pattern, or is it going to fail? Let me just go back to the dollar. I have a better feel for the dollar. The dollar made a peak D at 99.12 on the 25th of October. In the Chapman wave, peak Ds are I wouldn't say they're formidable, but boy, you do want to learn how to use them, because if you do know how to use them, what can happen? Let me just show you something. It's at this particular point right here. You got a down move, and then you identify the low bar. You start counting each successively higher peak. When you get to a peak B, that's when you can make decisions, especially if you're about to pass it for leg C, that it should go to a D. That's what your requirement is in the Chapman wave methodology. If it gets to a D, other things can happen. It could recycle, it can have an instant restart, or it could just completely break down. We've seen many peak D breakdowns. So that's your objective, is to get to D. And then there are other things can happen. Well, we got to D. And now other things, we've got to do 3 times already. That's the instant restart. What a perfect example of all these different techniques. And then you went to a third peak D at 99.12, and now you're pulling back. That's impacting the weekly chart, because the weekly chart of the dollar, look, it did not in this leg D go above the previous peak F of 100.51. So that says so far it's kind of a failure under that previous peak. So the dollar right in this area between 97, where we are, 97.20s, and I'd even let it go a little under the 9-period moving average intra-week, not the close, but intra-week to 97, maybe 23. But then it has to start another big move, like a brand new move that takes it all the way past the high that was just made of 99.12, and start on its way. It's still, even now, it's 3 points. What's 3 points? It's nothing. 3 points should be nothing for the dollar to break to an all-time high. So this is very important, because the pattern you're looking at here on the upside is the inverse in the euro-dollar currency pair to the downside. So that's what we've got to keep in mind. And if you're looking at the dollar DXY right here, this is extended, and that's the part that makes me just a little cautious, saying, wait a minute, you've extended past the left side, right side price time match. You've got another little two U-shaped patterns, 2 cups, and that's also taken 1, 2, 3, 4, 5, 6, 7, 8, 9 months, and you broke to a new, just a squeak to a new high, 22 cents. Sorry, 12 cents above the previous high of 100.39 for peak B. Then we make peak C, and all you need is 1 cent higher at 100.52. You start leg D. So we almost got there. I mean, we were at 99.12. That's like $1.50, less than $1.50 away. It's all it needed. I think the dollar is going to squeak there. But in the bigger context, I'm going to talk about this particular pattern here. And that's going to be really important tonight. What it means, what are the implications? So, yeah. Now, as I'm looking at this, I will do because the left side, right side price time was late. I'm going to do another price time, and that will give you another extension to the right. But I'm not going to do it just yet. So that's what I'm looking at. Now, the other thing is that a lot of the time, a rally in the dollar has coincided with the rally in the stock market. It doesn't have to. There's no absolute direct correlation, but I'm trying to look at it in a way that says strength in the dollar means that some of the multinationals will be pulling back, but other stocks will take up the slack and be very good. So this is what we're looking at. I'll make it real clear. A close below 96, let's call it 96.50. In the dollar, that's less than a point lower. We'll talk about time, maybe price, but definitely time being involved in making it a long shot now to get this year to get above 100.51. It's really going to be hard to do if you're going to be that weak in such a short period of time after such terrific strength. All right? So just make it as clear as I can. Now, here's the other thing. When we're looking at different stocks, For instance, what is Zillow telling us at this point? Big spike up today, up to 207 at 3509. What is it telling us about the real estate market? There's a real estate search and estimate site. Well, what is it saying? If you look at the HGX, the housing, this is still going down. It's not looking good. Oh man, if we got a dichotomous market, a bifurcated market. I'll talk about that when we get back. Basil Chapman, Tiger Traditions, our Dow's on 8.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So we're waiting for the Fed, I guess. What is the Fed going to do? There's nothing they're going to say. And even for December, they're going to have to obfuscate and sort of ameliorate any potential damage here. They're just going to say, we will see what the conditions are improving slightly, and we'll still see. But looking at the 10-minute chart, you see this H pattern right here? We make it bigger. It's just unfolding again. Most important thing is, what happens if the E-minis break, they're at 2098.50, if they break 2096, and then go straight down and test 2095, straight down, and then what happens at that low that was made this morning at 2091 round number low at about 220 this morning. 220, was that yesterday? Yeah, yesterday. What happens? All this has been is just a rectangle formation. Rectangle formations can last a lot longer than your patience. All right, so as we're about to wrap up, let me just do a couple of things here. I'm going to be discussing, in fact, let me go right here and I'll tell you exactly. So you see this bullseye? What was a bullseye? The coal industry. And the coal industry has gone from 60.30 back in June of 2008 down to $9.43. It's an 84% correction. Has a whopper of a rally from 9.43 to 51.87, a peak D in the monthly chart. And then intense selling pressure takes it down to 5.07, a 90% decline with the Van Ector's Vectors Coal ETF, KOL. Boy, if ever there was a bullseye. But let me just show you something here. What am I going to be discussing tonight? This is the agenda. Coda phase implications, politics, personalities, influence scenario. This is all related to the market. Match with the 1920s, the election market, dollar bonds, VIX, gold, retail and related sector charts, RTH, Amazon, etc. Barron's Confidence Index, chart discussion, crash charts. I'm not saying there's going to be a crash. I just wanted to show you what a crash chart looks like and what is the difference between a crash chart that occurs on October the 19th, 1987, 504 points down, 20% correction or something like that. And when it takes months or even a year and a half to get that kind of a decline. What's the difference? Talk about the Index 100, the IBB, Steel, HOG, Harley Davidson, current charts, looking at future positions that we already tried to get into. And I'll have a question and answer session. So it's just intense. And for subscribers, you know that I'm already trying to get into positions. We've already managed to get into one position, which has worked out very nicely in an area that I thought would pull back more, but it didn't. So we got in. So far, it's acting well. So we're going to be looking at all these different things. I'm thrilled to be able to articulate thoughts. I'm not going to go into some of the areas that I've spent time on before in webinars. This is really a fresh concepts, fresh ideas, putting together what has been, trying to look to the future. What do we do? How do we trade it? What am I looking for? And if you know that I'm looking at, because we've got buy modes in the monthly charts of our major indices, I have to expect that we will go to new highs. How and when and how you participate, that's going to be the real question. I'll try to deal with it tonight and over the coming, for those of you getting a trial subscription, I'll also show you how to use my subscription as best you can. So that's the story. You're about to go to your small lesson and then programming all day. I'll be on 6 o'clock Eastern time. You can get a trial subscription. I really think that this is for those of you who have portfolios of any size and you're really looking as to what's going on. Earlier in this year, I said lighten up a bit. There'll be a time where we want to put that money to work. So far, we're getting ready to put that money to work, but we have to wait for the pullbacks to occur to be able to do that. And that was just part of your portfolio to have something either in cash or just to be ready for anything that can happen. So that's what we'll be looking at, and that's what I'll be dealing with for the rest of 2016, because we will know that we already know pretty much the parameters. I'll be talking about that tonight, what to look for, why to look for it, and how we will try our best to deal with it as we've done in previous webinars. Hey, thanks so much for being here. I look forward to seeing you later tonight or tomorrow. I will be back with
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.